Has the cryptocurrency market officially gone crazy? Bitcoin is pushing toward old highs against all odds and has finally reached $50,000 this week, a price level which investors have not seen since May. Last month, crypto buyers were scrambling in panic as regulatory pressure in China forced holders to offload their assets and go back into Tether. This led to Bitcoin revisiting $28,000 and almost falling into the void due to insufferable pressure. But as of today, the #1 cryptocurrency has nearly doubled in value and is potentially headed for all-time highs. So what happened? Why is Bitcoin going to the moon all of a sudden? And what's causing investors to buy again? Welcome to Shrimpy, everyone. In today's video, we'll show you 3 major reasons why Bitcoin decided to move forward after a particularly intense period. The best part, you'll get to find out why the rally might be sustainable this time around. Just a reminder, if you're a beginner day trader looking to improve your skills, look no further. Shrimpy Academy now offers 3 unique courses designed to grow your trading career by helping you understand the intricate world of technical analysis. But enough about that, let's finally talk about Bitcoin. 50K is not just a random price target. It's a psychologically important landmark that must be broken in order for crypto investors to regain faith. After all, we've been practically stuck in limbo ever since living the $60,000 price level in April. And as we all know, digital assets must continually achieve great feats to keep those oh so important hype levels at a steady rate. For us to know whether the ongoing rally is sustainable or not, it's important to first uncover the main factors driving Bitcoin's bullish rise. So let's dive right in. Since the start of 2020, the #1 influence of not only the crypto market but the stock market as well has been COVID. Realizing that the dollar depreciates in value as long as the government prints money to stimulate the economy, both retail and institutional investors have begun buying en masse to save their hard-earned money. While that might sound weird, stocks and cryptocurrencies had reached their highest levels at the same time when COVID cases reached their own respective records. Likewise, assets either plunged or had their growth slowed down when it seemed almost as if the pandemic was over. The pattern was incredibly noticeable over the course of the summer when cryptocurrencies had again dropped in value together with the number of COVID cases. Events like regulatory tensions have also contributed to crypto's momentary downfall, but the news was not serious enough to leave crypto broken forever. As cases are on the rise again, investors are now left to wonder whether yet another COVID wave will force governments to print money again and therefore devalue the dollar. As a matter of fact, the Federal Reserve will hold its annual economic symposium this Friday, and many experts believe that the event will bear negative consequences on the dollar's strength. If such a timeline was to unfold, we could see renewed inflows in both cryptocurrencies and equities. In fact, investors who have missed on Bitcoin's rally for the last 2 weeks might panic and FOMO into the asset in hopes of joining the wave on time, which would be just enough for the asset to break 50K. Economists had originally held high hopes for this year's Jackson Hole Economic Symposium. Their expectations have severely fallen recently due to the rise of coronavirus cases in the US and the rest of the world, which has the potential to change the Fed's position. Fearing the effects of yet another lockdown wave on the economy, the likelihood of putting stimulus measures on hold has increased. Therefore, not implementing any measures that can increase the dollar's value is a sign that investors will have to once again exit fiat currencies and open buy orders on anything possible. Bitcoin's funding rates on future and options markets represent another reason why the rally might be sustainable. A look across all major cryptocurrency exchanges shows that traders with long positions pay the standard 0.01% funding rate. Even on days when we do see sharp rises, funding stays relatively the same. Why are funding rates important all of a sudden? Because historically, they tend to indicate a high level of volatility. Although volatility is great for trading, it's rarely ever a sign of a sustainable and healthy rally. What this effectively means is that there's no FOMO on the side of futures traders, and buyers are actually located on spot markets instead. Since investors have reigned supreme over traders, we can tell that the market isn't buying to grab a quick buck, but to hodl over a long time period. This is a stark contrast compared to how price action played out earlier this year. Even though Bitcoin experienced drastic price growth over the course of mere weeks thanks to Elon Musk's tweets, the rally did not manage to stand on its own 2 feet once market conditions went awry. In fact, the downfall seen in May showed us that Bitcoin couldn't hold the $48,000 price level. or 42,000, or even 35,000. And if we think back to a few weeks ago, it's apparent that even $29,000 was a price level that Bitcoin barely managed to hold. So as you can tell, this time investors must be confident when buying. The rally shouldn't be driven by memes, tweets, and hyped up news, but rather by tangible and bullish factors such as concerns over inflation or a weakening dollar. And what other way can we tell that buyers are confident other than with a calm market? The third big reason why Bitcoin is possibly headed to the moon is the fact that market participants are brave enough to jump right into altcoins at this time. Even though all the data is not there and there's no way to surely tell if crypto is rallying or not, we've seen huge growth in both altcoin and DeFi segments. On the one hand, those magnetized by DeFi's revolutionary financial instruments have all of a sudden joined the NFT bandwagon, a small but powerful segment of the DeFi market focused on digital ownership and tokenized property. NFTs have gained huge traction for the last month, and being the most volatile and speculative asset of them all, we can only conclude that investors do not fear being positioned in a highly risky environment. On the other hand, altcoins that have historically been slow to perform together with the rest of the market are also showing signs of strength. This month alone, Cardano has tripled in value only because of a sudden announcement concerning the launch of its smart contracts. ADA token completely breached leaderboards and surpassed major tokens like BNB and USDT, only for it to rank third right after Bitcoin and Ethereum. Although not as amazing as ADA, even large cap cryptocurrency Ethereum saw a drastic price increase. The token grew by 56% over the course of 30 days and isn't showing any signs that it might slow down. The same can be said for Binance Coin, Polkadot, Solana, Terra, Monero, and Avalanche, altcoins that have all seen double-digit growth recently. And while all this is happening right now, good news is popping up as well. This week, leading online payment processor PayPal has announced that its UK-based clients can now buy Bitcoin, Ethereum, Litecoin, and Bitcoin Cash through the platform. This marks PayPal's second ever crypto expansion into jurisdictions outside the US. Iran has decided to lift its crypto mining ban, Visa bought an NFT, and Korean regulators had their first cryptocurrency exchange registration filed this week. All in all, things are finally looking good for not only Bitcoin, but the entire decentralized market as a whole. Did we miss anything? If you know of another major factor that heavily influenced the cryptocurrency market this month, make sure to let us know in the comments below. As always, subscribe to our channel and leave a like if you enjoyed watching today's video. Thanks for watching, and we'll see you next time.